But what I'd like to go ahead and bring things to order. Welcome everyone. I know there's people going to be coming in as we speak. But also yesterday was Veterans Day. Hopefully it was a little different this year. No real parades or speeches, but hopefully many of you at least thank the vet. But what I also like to do is go ahead and take a moment, get everyone just who is sitting to go ahead and stand. And I'd like to go ahead and pledge your allegiance to our flag. But one thing before I actually get started, I kind of want to highlight, that the word indivisible. It means unable to be divided or separated. We are the United States. So please keep that in mind as we pledge our allegiance. So along with me, I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, indivisible, with liberty and justice for all. Thank you. I think that has some little extra meaning these days, more so than it has in the past. I also want to welcome everyone here. This is for the SRCAR tax panel. This is actually brought to you by our education committee. Notice our chair is here, Barbara Horan, who's been running things. How this came about is a couple of months ago during one of our monthly meetings, which we do meet the first Wednesday of each month. Lately, we've been doing, at least for the past 8 months, we were doing it via Zoom. But our education committee is almost like a think tank. We do a certain amount of vetting, but we also saying, what can we bring to our members at large? And I brought up, so hey, let's do some little bit of tax planning. I know this year, when it comes to our pandemic, real estate has been sort of a bright spot and has been kind of for a handful of us, has been a good year, if not exceptional year. So let's try and do some tax planning. And in the past, we've had some panelists. We had sort of a tax panel, said, hey, why don't we kind of create some version of a tax panel? And because I brought it up, they suggested, hey, Mike, see if you can reach out to a couple of your CPA experts and friends and associates and see if we can put something together. And that's exactly what I did. I reached out to Esther, Phahla, who I've known for years, and also Nicole Albright and a couple of others. But luckily, the two who I hoped could make it actually made it today. And I don't have a lot of questions because I don't know what I don't know. So I trust that they'll be able to, I think Esther is going to go start off first. I think her highlights will be more of a tax planning, year-end tax planning and general planning. Both of them are very dynamic and both of them have come from very different backgrounds and both of them have really succeeded in their fields. I know Nicole afterwards will probably more or less highlight when it comes to incorporations and also how I know many of us have applied for the PPP loan and the EIDL loan. I know Nicole, some of us have actually, when they first came out with the PUA, what they call the pandemic unemployment assistance. And I like to, see what tax ratifications about that would happen. But first of all, I want to go ahead and introduce Esther. Esther is the founder and president and CEO of Esther N. Phahla CPA, a professional corporation located here in Temecula, California. She is a professional tax services firm specializing in tax planning, tax preparation, tax solution, and business consulting for small businesses and individuals. Esther is licensed certified public accountant, CPA in California, and a certified tax strategist, CTS. She's dedicated to helping small business owners and individuals design a optimal tax strategy to help her keep more of what they earn, because it's not how much you make, it's how much you keep. Now, Esther holds a Master's of Science in Taxation degree from the Golden State University and a law degree from South Africa. Cool backstory there. Esther uses a close personal attention approach in serving her clients because her clients' needs and goals are different. She keeps up to date with tax law changes by taking professional education courses every year. Now, Esther has been awarded several awards in her industry and community. She was selected as a 2016 Women to Watch Experienced Leader by the California Society of Certified Public Accountants, in partnership also with the American Institute of Certified Public Accountants and its women's initiatives. Now in 2014, she led by example award the Firm Leadership by American Women's Society of Certified Public Accountants. Also in 2013, she was an honoree for the 25 Most Powerful Women in Public Accounting Awards by the CPA Practice Advisor. Now, getting a little bit more local here, in 2013, she was awarded the Sterling Business of the Year by the Temecula Chamber of Commerce. Also in 2013, she was the 40 Under 40 by the Marietta Chamber of Commerce. She's also an active member of Toastmasters International. That's where I actually met her from, and where she has served on numerous leadership positions. She's also active with the Rotary Club of Temecula, as well as Temecula Valley Chamber of Commerce, where she has served as a board of directors there. She currently serves on the board of directors for the Cal State University San Marcos Foundation. But when she's not doing all of this, she also enjoys spending time with her husband and daughter, traveling and reading. Now, I'd like to give a very warm SRCAR welcome to our first presenter, Esther Phahla. I was hoping to hear some sort of claps or awards, but yeah.
Well, thank you, Mike, and good morning, everyone. Thank you for this opportunity to present to you. Before I get started, I have to do my disclaimer. We all know that this is for educational purposes and it is not in any way intended to be tax advice. Please consult with your attorneys, your tax advisors, or any professional regarding investment advice before you take action. So today we're learning, we are going to explore some questions and answer session and see whether you can get something out of this. The topics that I will cover, as Mike alluded, I will be focusing on year-end tax planning. December 31st is around the corner. I will also cover year-end business deductions. Some of you did very well and therefore you have a good problem. Lots of money, therefore meaning you need to find some deductions that are legit, of course. I will cover some 2020 update. What are some of the tax law changes? You've heard about them throughout the year. And we'll also look at 2021, looking ahead. And then we'll finish up with a Q&A session. The wisest man in the world said, the hardest thing in the world to understand is the income tax. Do you all agree? I hope so. So let's get started with tax planning. When it comes to tax planning, I am going to be focusing on some general business deductions, and I'll also look at some family, how can we involve our family, marriage, kids. I'll also look at whether is this the right time for you to purchase a car before the end of the year, or can you even use your existing car into and incorporate it into your business? And whether are you also overlooking the Section 199A deduction, the qualified business income tax deduction? I hope you've been hearing about that for the last 2 years since it was implemented. And then also, can you do something with your stock portfolio? What about the medical plan strategies and even retirement plan? Those are the items that I will be focusing on. Now, starting with tax deductions, if you did well, yes, like I said, you have a good problem. Tax planning can take many forms. It's all about timing. Timing meaning right now, before the end of the year, what else can you do before December 31st? Because once the clock strikes at midnight, December 31st, there is nothing much you can do. Can you shift some income? Another strategy. You have kids, you have family members that you're supporting. Can you turn those into some business deductions? Can you use the IRS code to your advantage? Can you use products? Products are retirement plans. What else could you be doing? Let's talk about year-end business deductions. The IRS has what we call a safe harbor. You can prepay your business deductions under the safe harbor. What does that mean? It means you can prepay some of your 2021 deductions right now before the end of the year. How that works is that you can even do 12 months. I know nobody wants to part with 12 months worth of deductions, but let's take, for example, if you had a rent, if you are renting office space and you were to pay rent every month, $2,000, can you prepay January and February in order to accelerate your deductions? Yes, you can. The IRS allows you to do that. You talk with your landlord. Let's say on Thursday, December 31st, you mail your check for rent for those 2 months in December in 2021. Your landlord receives it January 5th of 2021. The timing is perfect. You paid it December 31st. He or she receives it 2021. It's a win-win for all. Your landlord has money in his or her pocket. He does not have to worry about your rent. He does not have to worry about whether you'll be renewing that lease. But on the other hand, you get a business deduction. So that's called the safe harbor prepayment of your business expenses. Number two, you can buy your office equipment. Maybe you've been using an old laptop. It's not working to its optimum level. Maybe you've been looking for that color printer. Can you do it right now? Most of us are working from home. Do you have a dedicated office space that you can use? You're not moving from couch to bed to kitchen table. You have your own dedicated office space. Maybe it's a room in the house that you have not been using. That's where you can get yourself that business office space and then buy yourself the equipment that you need to use to allow you to work at your optimum level and be that real estate professional that you need to be. The other one is, this one I don't encourage, but if you know your clients, you can stop billing your customers and therefore time your billing in the new year. This means your customers, when they're not billed, therefore they're not inclined to pay you. You are postponing their payments to you. That's how you accelerate your deductions. You can use your credit cards. All of us, most of us here are cash basis taxpayers. When you use your credit card to purchase business equipment, not on a Christmas spree, no, for business expenses. When you use it for your business expenses, then the day you charge it is the day that you get that deduction, and therefore it postpones your cash. You pay for it the next year, January 2021. I've seen a lot of small business owners, especially first-year business owners, they worry about taking too many deductions. No, if you've been documenting your deductions, if you have good records, you are allowed every business deduction that you have incurred. Do not worry about taking too many. Let your tax accountant advise you on that. And when your business deductions are higher than your income, that results in a tax loss. That's what we call a net operating loss. And with the passage of the CARES Act during this year, we all know that now we can carry back that net operating loss to 5 years. For some of you, 2018 and 2019, you had to pay tax. Can you look back and see whether can you recoup some of that tax that you paid by carrying back the loss 5 years? That's something that came out of COVID-19. We know all of us, most people struggled health-wise, but some of the acts that were enacted, they allowed people some benefits. So make use of those benefits and make them work for you. Let's take a look at the marriage deductions, whether can you do something about employing family? I talked about shifting income. When you shift income and employ your kids that are under 18 years of age, do you have a documented, what do you call it? Employment agreement. Can you pay your kids for doing work for you? that allows you to save. You can deduct that amount, and with the standard deduction being at its highest right now for single taxpayers, when you pay your kids, they can deduct up to $12,400. So you pay them a wage that is reasonable based on the work they're doing. Don't just pay them for doing chores in the house. They have to be business deductions. That's how you employ family. Are you a person who's always rescuing family members when they have issues? Can you put them to work? Can they work for you? Can you make those gifts tax deductible? Look into all of that. Last minute family purchase, you can purchase a vehicle. It's the end of the year. Do you need a car that allows you to go to those open houses? Are you always struggling to get to your open houses? Maybe this is the year that you need to be buying yourself a good car. It doesn't have to be luxurious. It just has to be a car that works for you. It allows you to move from point A to point B. It's neat, and you can carry all your staging items in that car, and it's a win-win for all. And with Section 179 now at its highest, you can take both a bonus depreciation, including a Section 179 deduction. So for those of you, as I'm saying all these items, some of them may be tax lingo. Write your questions down and we can address them and maybe try to clarify where things are not clear. Can you turn your current existing car, personal car, into a business vehicle? Yes, you can. You just need to make sure that you place it in service December 31st and you do everything that is required under the law for you to optimize that. So let's explore at length some of what you could be doing with last minute, let's say for cars. Most of you are probably needing a car. To be able to deduct that car, you need to own it. And also you need to place it in service by December 31st. That gives you the ability to elect bonus depreciation 100% thanks to the Tax Cuts and Jobs Act. You can select Section 179 expensing up to $25,900. You can use maker's depreciation and spread it over a 5-year period. And there are no luxury limits for cars. What about your existing one? I talked about your existing car. You can turn your existing car into a business car. Many of you are self-employed. You can even take a car that you've given to your kids. You take your old car, you give it to your kids. Look into that. Is this something that you can bring it back before it wears down into personal use? Once it has a lot of personal use, yes, that opportunity will be lost, because by the time you sell it, it will be a personal car. It's no longer a business car. But while it still has that business use, you can use it. And when you sell it, probably at a loss, that is a business loss. But remember, again, if it's producing a gain, just leave it, let it be a personal vehicle for the family. Let's see what else. While we are looking at all these business deductions though, do not forget your Section 199A tax reduction strategy. We were all introduced to Section 199A at the end of 2017. It was going to be applicable starting with the 2018 tax year for all of our sole proprietors, for all of our S Corps, S corporations, partnerships, LLCs, all the flow through entities. And then the corporation was given a 21% tax deduction. So do not overlook that, because sometimes when you accelerate your deductions for the business, that might hurt your Section 199A deductions. For example, for many of the S corporation owners, don't forget to take salary. Reasonable salary is required for you as an S corporation. Many of you were not able to get the PPP loans, which I think Nicole will cover, because you had no salary on your business tax return. That was based mainly on the salary that you have to pay. You had to keep people to work. And as an S corporation owner, you are an employee of your own S corporation. Do not forget to pay yourself that. But sometimes people tend to take a lot of salary, then it reduces your flow through, therefore it affects your Section 199A deduction. This is where tax planning comes into the picture. Make sure that as you are accelerating these deductions, it's not affecting your Section 199A deduction, because that is a given to you. That's your income minus your deductions. Then you take that on your personal tax return. You will not realize it on your business tax return. While you're working on your S corporation, make sure that whatever is flowing through will allow you for that deduction. While we are doing all of this and spending towards the end of the year, be on the lookout for your cash flow. I know in real estate, usually there isn't a lot of accounts receivable at the end, but for most of the business owners, the encouragement is look at your accounts receivable. Are you carrying a lot of accounts receivable? Can you go after your customers and get that cash in? And if you have accounts payable, can you talk to your vendors and make some sort of an arrangement with them onto how you can start collecting that money? Cash flow is very important in running a business. And without it, we've all had cash is king. Manage your cash flow. That's part of your year-end strategy as well, because come tax time, you will be hit with a tax bill and you will not have money to pay. But if you do tax planning right now, you know that you are better prepared and you know what to expect. If you need to calculate your estimated tax payments by the end of the year and do a catch-up estimated payment to reduce your penalties come tax preparation time, this is the time for you to manage that. And many of our taxpayers fall prey to what we call intoxication. I love it when a client comes to me and says, "Ooh, can you promise me a refund?" No, we don't do that. And it's also not allowed by law. I cannot promise you a refund when you come to me. Remember, a refund is your money that the government is holding with no interest. You are better off breaking even at the end of the year. This is where you manage that cash flow. Can you review your W-4? Can you review how you are withholding? Those are things that you need to sit down with pen and paper in hand and review all those things. Are you getting a lot of money when it comes tax preparation? Or are you paying a lot come tax preparation? Review all that and try by all means to break even. Let's talk about some of the common mistakes that our business owners do, and it costs them a lot of money. I'm all about planning. Benjamin Franklin said it best: failing to plan is planning to fail. And I've had a question. People will ask me, Esther, what's the difference between tax planning and tax preparation? Tax preparation, we are looking at the rear view mirror. What you did in the past year, I cannot reverse it, or any other tax professional out there cannot reverse what you've already done. Therefore, it's only just taking your paperwork, putting it into my tax software, and producing a document for you to comply with the government. But with tax planning, we are strategizing. We're talking about your goals, your future plans, about today, about tomorrow, about the next 5 years. We are looking at you. What keeps you up at night? What are your aspirations? Where do you plan on taking this business? That is tax planning. And tax planning, to me, you are audit proofing your records. When you are constantly looking at your tax records, your financial documents, you are audit proofing them because you are aware of every penny that comes in, of every penny that goes out. Therefore, even if you were to be audited today, when an IRS agent shows up and says, where did this come from? What is this? You have documentation because you've been working on this all year long. It's not something that you're pulling out on March 10th to file on March 15th, or you're pulling out April 1st to file on April 15th. No, you've been working on your records. You know what's in those books year in and year out. And that's a great segue to our bookkeeping and record keeping. Invest in a good software program, invest in a bookkeeper. That will save you lots of money. That allows you to do what you do best. Most people hold on to cash. You are now wearing many hats. You do your own bookkeeping, you do your own hiring. Yes, as a small business owner, when you get started, of course, you'll be doing all of this, but can you let go of some of these things once your business is starting to show some growth, especially in the bookkeeping area? Bookkeepers don't charge a whole lot. They charge you reasonable enough for you to understand your books. They can explain to you what's going on. They relieve you of some burden of you having to figure out what's a debit and a credit. Where do I put this in QuickBooks or whatever records that you're keeping? Allow them to help you. The fourth one is operating under a wrong business entity. Have you evaluated lately? Does operating as a sole proprietor allow you to do everything that you need to do? We all know that as a sole proprietor, you can't pay yourself salary, but you can hire other people and pay them a salary. What happens to those draws? Are you okay with that self-employment tax as a sole proprietor? Have you evaluated that lately? Could an S-Corp serve you better? Or maybe is an S-Corp hurting you? You're not benefiting under it. With an S-Corp, you do need to pay yourself a salary. When you pay yourself a salary, you are able to even have a retirement plan based on those earnings that you're paying yourself. You can deduct your health insurance. So evaluate and take a look at your business entity. Or maybe the S corporation and the sole proprietor are not even best for you. Could a C corporation benefit you with that 21%? Take a look at that. And all it takes is looking at them side by side. You are not just talking to a friend somewhere and then you are all sitting and say, oh, I have an LLC. Oh, I'm going to form an LLC. It doesn't work that way because you don't know what prompted your friend to work on the LLC. And remember, in an LLC or a partnership, you cannot even pay yourself a salary. That's a mistake that we see. That's where you deal with things like guaranteed payments. You still deal with self-employment tax under those entities. So evaluate and be sure whether, is this the best business entity that I'm operating under? We talked about the qualified business income. For the three entities that I talked about, we have a sole proprietor, which allows you to take the 20% qualified business income deduction. The S corporation, you are allowed to take that. Any of the flow-throughs, partnerships, and an LLC if it's a partnership. But remember, an LLC, if it's just you and it's just you by yourself, that's a single member LLC and you still need to report it on your personal tax return and it still looks like a sole proprietor. It's just a protection on the legal side, but tax-wise, you still look like a sole proprietor. Evaluate all of that. Are you separate from your business? Can you distinguish if you were to be sued today? Look at all that. Are you covered? Retirement plan. Do you have a retirement plan in place? What does the future look like? With a retirement plan, this year is a good year for many of you to even set it up. The laws were changed and revised. Make sure that you take advantage of that. There are many of them. I'm not a financial advisor, but several of them, the SEP IRAs are good. There are no requirements for you to file paperwork, no 5,500, or you can do a 401k if it allows you to have even a profit sharing, depending on how many people are employed by your business. You can do a simple IRA. So talk to a financial advisor to allow you to do that. We talked about family employment. This is where you employ your kids and some of the money that you pay them is not subject to federal income tax if you pay them under your sole proprietorship. But if you have an S-Corp and you pay them there, yes, they will be subjected to some payroll taxes. So do evaluate where you are doing all this. And then some of the mistakes, yes, the do-it-yourself, you're trying to save money, penny pinching right there. You are a professional. Can you imagine me selling my own house? No. So if I allow you to be my professional, you sell my house, you tell me all the things that are happening in the real estate industry, then I'm better informed. I'm relying on a professional to help me out versus trying to do all kinds of things by myself. So do invest in tax professionals that can help you out. We've all seen in this past year several tax law changes. The CARES Act brought out several tax law changes. The Families First Coronavirus Response Act as a response to the pandemic. The SECURE Act was introduced before then. The Taxpayer Certainty and Disaster Tax Relief Act. We've all seen all of that. So let me. Some of the updates, we all know that our standard deduction will be going up this year. If you're single, you can get up to $12,400. If you're married filing joint or a surviving spouse, you get $24,800. Married filing separate is similar to single, it's $12,400. And head of household is $18,650. So if you don't have to itemize, you still have a good deduction for yourself there to help reduce your income. Some of the tax brackets, we still have the 7 tax brackets. If you know where your income falls, these are available on the internet. I will not go through them, or irs.gov. I got this chart from there. Take a look at where you are. What can you do to reduce that income? Some of the 2020 tax updates, we all know as an independent contractor, we've used 1099 miscellaneous. With 2020, they have introduced a form 1099 NEC. So if you have independent contractors, use this form 1099 NEC. NEC stands for non-employee compensation. The 1099 miscellaneous is still being used for rents and other miscellaneous income. This was to help distinguish between different types of payments. This past year, again, some people received the economic impact payments. And the question has been, will I be taxed on this money? No, this money is all yours. And some, for those of you that did not receive it, it will be reconciled on your 2020 tax return. Charitable contributions, there is an additional $300 for those that do not itemize. You'll be getting that as part of your deductions. For example, if you're single and your standard deduction is $12,400, you'll get an additional $300, and $12,700 will be your deductions. Required minimum distributions, it's no longer at 70 and a half. You can now stretch it to 72 years old. And the reason for the 70 and a half, I've heard it has always been that they want you to start enjoying your money earlier, therefore you are required to take these. Retirement plan distributions as well, those that were affected by COVID-19, you were allowed to take some distributions there, but you had to follow some strict rules there. Be mindful of the stipulations, whether did you really qualify. Retirement plan loans, you were allowed up to $100,000 to take a retirement plan loans. In the past, only $50,000 was allowed, but with this year, at least $100,000. But also, you have to fall under certain specific rules. The traditional IRA contribution age has also changed. You can contribute at any age now. I don't know how long this will stay into effect, but that's all. Those are the changes that happened this past year, 2020. And also remember, if you need to complete a W-4, some of you work for other people. When you work for someone else, make sure that your W-4 is updated. We're no longer using allowances. It's now based on your filing status, and it's now, I think it's close to accurate on how you can withhold. You're not withholding too much, you're not withholding a lot. And the W-4 allows you also to be able to put in some more if you wish to withhold more. Some of the extended provisions are the qualified principal residence debt. Those have been extended. They had expired in 2017, but with you have until 2020. The mortgage insurance premiums, we saw them come back on our 1098s this past year, and you could still deduct that. Tuition and fees deductions also came back in 2019. So be aware of some of these things that have been extended, because sometimes the government will take away things and then they bring them back at the end of the year. The non-business energy property credit was also brought back. The medical expense deduction was also reversed from that 10% to 7.5. So be aware as you're filing your tax returns that these things are available to you and they have been extended. Where do you go from here? Just like when you go to a doctor, the doctor does not give you a prescription without having diagnosed you. That's what tax planning is all about. You sit down with your tax professional, they take a look at your records, and they can diagnose the problem and then prescribe what's available. Prescription looks something like, oh, Jane, you need to be forming an SRCAR. Your sole proprietor is not serving you well. Oh, maybe you need to start a retirement plan. Which type of plan is better suited for you, Jane? And then you go and fill that prescription. How you fill the prescription, you probably don't even need to work with your current accountant. Now you move on to a financial advisor. Maybe you move on to another specialist who's going to help you with whatever prescription that needs to be filled. That's where we are proceeding. Looking ahead, my take is have good records. Bookkeeping is going to be your key in looking ahead. You have these last few months, a month and a half now, it's what, 11, 12 today. You still have a month and a half to really put together your records. Don't scramble last minute. I have discovered that people who do not have good records are missing out on major tax deductions, and you realize it later. Plan ahead. Have that separate bank account, stop commingling. When you have a separate bank account, it's very easy. Your bookkeeper can just download your transactions directly to your business bank account. They don't even need to see your personal items. They don't fiddle in your personal affairs. Manage your cash flow. That is very important. The season is coming. I'm not here to preach to you, but know your cash flow, know where you're spending your money, and invest in good tax planning. It may be a foreign word to you. You've never heard of tax planning. You don't know what it's all about. It all takes a few items. You don't need to implement everything and be overwhelmed. Just a few little items to move you in the right direction. What would a $4,000 tax reduction do to you? Wow. What would even a $2,000 tax reduction do to your financial situation? Plenty. And as I've said, I love this quote by Benjamin Franklin: when you fail to plan, you plan to fail. I do have some gifts for books. I've written some books in the past, and I will send these to Mike today for those of you. And we have had a criteria as to how we're going to do this, but you'll find out. And this other one is 10 most expensive tax mistakes that cost business owners thousands. This is where I've tabulated almost in detail what we've talked about today, but there's no CARES Act in it. There is no the Family Coronavirus Act. But we do have some things that can help you in there to take a look at your business. Thank you. It's been a pleasure talking to you today, and we will address some questions at the end with Nicole.
Thank you, Esther. Very insightful. I also want to I don't know if I emphasize that, this is being recorded, and this will be handed out or sent out later on today or tomorrow to the current participants. Now, before I actually introduce Nicole, we did have one question in the chat room, which I thought I'd go ahead and direct to you right now, Esther. It's from Richard. He says, how can I give commission to a family member without a tax liability to myself? I don't want to put you on the spot, but how would you respond to
without
that?
it? Well, the family member can be an employee. Let me start with this. Is the business, what type of business is he operating in?
Richard, I think Sylvia enabled us to unmute ourselves. Do you want to unmute yourself and kind of answer Esther's question?
Can you hear me?
Oh,
yes. Hi, Richard.
Okay. I'm a retired broker. My daughter recently purchased a new house from a builder, and I don't didn't really want the commission to go to myself. It'd be eroded by taxes and all that. So I attempted to direct escrow to direct it to their loan costs, dues, etc., but got told that I must have a 1099 for it, and I cannot do that. So that's the basis of my question.
So the money was supposed to be paid to you, or has it already been paid to you?
Well, it's on its way from escrow, and it'll be paid to me. And I have no company. I'm just like I say, a retired broker, just doing deals here and there for family.
Yeah, so if it's over $600, yes, they will issue that 1099, and you will need to report it on your personal tax return and have it subject to self-employment tax. If you have deductions that are related to that job, yes, you can use them to offset that income and help to reduce it. That's mostly what I can offer you, because it's already been paid to you, it's already been directed to you, and you transferring it to another family member, the 1099 will be in your name. That's what escrow has. I don't know if Nicole has something more to share on that.
Thank you.
Very good. Well, don't have any other questions at this point. I assume people are probably formulating them as we speak, but I thought let's go ahead and introduce our next presenter. Nicole Albright, are you almost ready? Can I hear you?
I'm ready for you, Mike. And Esther, great job. That was fabulous information. Thank you, my friend.
No worries here. Now, I actually pulled this little intro from your website, Nicole. So Nicole is an enrolled agent and also a CTC. At only age 18, Nicole was already a struggling single mom. Financial strain and tough parenting decisions were a constant burden. Now, her personal goal to further her education was regularly challenged. Through unwavering grit and determination, Nicole fought through every obstacle to achieve career success and financial peace. Thanks to mentorship from her business partner and coaching from some of the nation's top business leaders, Nicole Albright has excelled in her industry. She is the managing partner of Financial Accounting Services. Nicole has enjoyed helping business owners create tax and financial strategies to improve their business and, key point here, profitability. Now, Nicole is an active participant in our community. She was actually awarded Temecula Citizen of the Year in 2012 and Volunteer of the Year in 2013. Now, recently, she was awarded Temecula's Joan Sparkman Unity Award. That's cool. Along with her team, she actively leads Financial Peace University, which is even cooler. A course designed to teach individuals and families get out of debt and start saving. It's a financial guru, Dave Ramsey, has endorsed Nicole Albright as Temecula Valley's #1 tax expert. Now, Nicole's vision is to help people provide hope and inspire change so that others learn to live modestly. That's got to be a challenge in our living large world. But I love this, and leave a legacy to help change the world. Please give Nicole Albright a very warm SRCAR welcome, at least virtually.
Thank you. Thank you for that, Mike. Okay, so good morning, everyone. It's lovely to see either your box with your name in it or some of your faces. And today, Mike has asked me to talk about everything PPP. So a lot of us already got the PPP. If you haven't yet, it's done unless there's a round 2. People are asking my opinion if there's going to be a round 2. I don't think much is going to be done in this before the beginning of the year. If there is a round 2, I think there was so much fraud with round 1 that will really be, it'll be targeted to specific industries that have been really affected by the shutdown, such as restaurants, hair salons, things like that. So if there is a second round, that's just my opinions there. We'll also cover the idle loans and Nicole's thoughts there, however you guys want to read into those. Other resources from COVID-related disaster that we've had. And I saw a couple people had questions on should I incorporate? So I just wanted to quickly cover those. I don't have a disclaimer because I'm not as cool as Esther, but I'll just copy Esther's disclaimer there. So let's talk about the PPP loan forgiveness applications. A lot of people are received the PPP in May and June, and now they're waiting. The Congress extended, or Trump extended, to 24 weeks. At first it was 8 weeks, and we were still in shutdown mode. So we had a ton of industries that weren't able to even use the or plan to use the funds because they were shut down. So that the government extended it to 24 weeks. So now a lot of our clients and community, they're coming to the end of the 24 weeks. And now everyone's starting to stress about applications. First off, and also too, if you guys have questions, go ahead and read it, pop them in the chat. Mike, usually it's a lot more beneficial because if someone asks a question, someone else then has another question followed up on the question. So go ahead and interrupt me and proactively ask the questions. And then that way, no one forgets their questions, because I know everyone has questions about the app. First off, should I file the application for forgiveness yet? We are letting clients know that you really shouldn't. And here's why, is because I feel like every week or 2 weeks, what I said last week no longer applies. The government they're changing rules so quickly in favor of business owners and in favor of getting those PPP forgiven. So if you file your application now, you're going to be under the rules that are in effect right now. And so when your 24 weeks are up, you have 10 months to file these applications to get the PPP forgiven. So unless you're going to, we'll talk about the loans under 50,000, that easy calculation. Unless it's that, I'm telling most of my clients just to wait. Let's see what happens and what unfolds with these. So first off, a lot of people got loans under $50,000. I would guess that anyone that has a PPP loan in our group that we're talking to right now, probably about 80% of you, it's going to be under the $50,000. And so fantastic for you. Right now, you can go online, and the form is called a 3508S. Now, let me just back up and say most banks have no idea what they're doing right now because the government's changing the rules so fast. So a lot of banks don't even have applications up right now. But if your bank does have the application up, Form 3508S, I haven't seen any banks myself. If it is up, it's really a check the box, sign your name. There's no calculations due. If the loan is under $50,000, it will be automatically forgiven, which is fantastic, right? Now, loans over $50,000, there are two applications that you're going to use to get those forgiven. The first loan, the first application is a 3508EZ, much less calculations. You still have to document everything and prove everything. And then also the regular form 3508. There's a lot more calculations to that. And we're finding clients are going to use that form if they have large amount of employees and salaries were reduced, or their head count, meaning I started with 30 employees and now I'm down to 22 employees. I haven't hired everyone back. If counts are down, you're going to use that form. So, and Mike, just interrupt me if we have any questions. Okay, so what do we have next? The rundown on PPP forgiveness eligibility. For full forgiveness, you're going to have some requirements. Most people are falling under the 24 weeks. I haven't seen anyone yet that is benefiting from the 8 weeks, but we should run both those calculations to see. Most people, after 24 weeks, they've hit all their maximums, especially with payroll, if they are allowed to be open and operated. And so 60% of the loan is used for payroll costs. That's gross payroll, certain state taxes, not state income taxes, but state taxes, retirement contributions that the company's making on behalf, and health insurance premiums that the company's paying for their employees. 40% of the loan can be used for mortgage interest on your commercial property, rent, utility costs. We've seen cell phone being able to be thrown in that as well, internet. And but if you used all the loan, a lot of our clients, if they were able to operate and be open, had used all the loan on payroll costs, that's great. Then we'll just have to, it's less documentation we have to submit because it's really just payroll records, quarterlies and things like that, quarter end forms that your payroll provider provides. A lot of payroll companies, we have a payroll company here as well, Karma Payroll. They are now including a fantastic report that really helps walk you through the form if you do have to provide some calculations. So part of this is you had to keep your full-time equivalent employee levels up. So if you had 30 employees before this, you have to have 30 employees after. I will tell you some new safe harbors that are going to be provisions that are going to allow us to ignore this rule, which is fantastic. These are new because I had a lot of employers that were really stressed out about this. And then also, if you reduce any employees' wages by more than 25%, those have to be restored as well. So what if you did reduce? I'm going to just cover this really quick because I don't think this applies to a lot of people in our Zoom. But basically, there's a new safe harbor provision that if your business doors were required to be fully or partially shut, a safe harbor applies. This will apply to most of us because real estate agents really got affected, especially in the beginning of the shutdown. You're affected where you can't do open houses anymore, things like this. So a lot of people are automatically going to fall under this. Therefore, we don't have to worry about the full-time employee headcount exclusion. So we don't have to do those calculations, which are a good thing. Ppp loan forgiveness. If the loan isn't forgiven, it turns into an actual loan with interest rate at 1%. So some people, clients are telling me they're not going to use, they're still not operating right now. And they're not going to use the loan on payroll costs because they don't have any employees anymore, unfortunately. And so that's going to convert over into a loan, and there's going to be an interest rate of 1% on that loan. So, you know, we already talked about payroll costs. A lot of people are asking me about owner's compensation. How much is that eligible for the loan? In the beginning of this, we were coaching clients on how to effectively use a PPP loan on their own compensation if they weren't able to operate and open up and hire their employees back yet. But these are capped now. So if you are on the 24-week cost and you took maximum payroll, the maximum that you can write off for yourself is $20,833 or 2.5% of your own owner's compensation that you paid yourself in 2019, whichever's less. So that's going to be an important thing to note there. And this is something that a lot of taxpayers don't know about. And during tax planning, this is coming up often right now. So I have a client, let's say they received a $100,000 PPP loan. And in the beginning, their business was very affected by the shutdown, but now their business is doing better. And so they're making equal money to what they made last year. A lot of my real estate agents are in this boat, or they're making more money than they did last year now. And because of the state of our housing economy. So what happens is, let's say you got a $100,000 PPP loan. Now the government came out and said that this is not going to be considered as income. And that is correct. It's not going to be considered as income. But here's the thing. If the loan got forgiven and you used it on the right things, the only way the loan can be forgiven, payroll and rent, and office utilities, then we can no longer deduct those on the tax return. That's how the law is written currently. We are lobbying really hard to get this changed because that's not how Congress had intended this law, but it's how the IRS had interpreted this law. So right now, what I'm doing is I'm looking at a client's profit and loss, their income and expenses, and you know they made the same as last year. Let's say $70,000 in 2019, and 2020 they're going to make about $70,000 as well because they recovered. I have to then subtract out a negative expense of $100,000. So now their taxable income is $170,000. And this is really, really important to note because I think a lot of people are going to have a tax issue this year, even if their business drops because of this PPP. So hopefully this law changes. You'll see me celebrating first on Facebook, I think, and we'll keep you guys apprised of this. So are there other COVID resources out there? So there is one resource, is the Riverside County grant that a lot of business owners are entitled to. And originally they said if you got PPP money, you couldn't get this grant, and then they changed it in round 3. So this is really important to note. If you are doing something and multitasking right now, stop and listen to what I'm saying. If you are eligible for this $10,000 grant, the due date is literally tomorrow or until funds run out. So right after this presentation, you'll want to go to the website I'm going to show you and apply for this grant. This is a grant, so it is free money. The $10,000 does not have to be paid back. To be eligible, you have to be in business before March 1st, 2019, located within the county of Riverside. You must be able to demonstrate that you have been impacted with COVID-19 pandemic. You have to have a current business license, 49 employees or less. And now you can get it as long as your PPP loan was $75,000 or less, which I think are many people in this room, in this Zoom room. So Riverside County grant, the grant money can be used on necessary equipment and operating technology, inventory, cleaning and restoration, rent and mortgage payments on your commercial property, and employee retention and support. So that's something to note. How you apply, here's that link right there. And if anyone wants to cut and paste that, or I can after we're done into the chat, go on and do that right now if you apply, if you are eligible for it. So Mike had talked about this in the beginning, is the unemployment. A lot of times people are self-employed individuals are not entitled to unemployment. And so let's just take my hairdresser, for example. A random hairdresser who's now definitely out of work. Her business is shut down. She can no longer go to her salon. And before this PUA was ever developed, she also never had the option of claiming unemployment because she didn't pay into it either. So it was, you know, those people were impacted so hard. And then all of a sudden, I forget the date, let's call it April 24th or something like that, the government came out with this PUA, the pandemic unemployment for self-employed individuals, which was a huge help to a lot of people. Unfortunately, I think it got mishandled and a lot of fraud happened with it. But if you were out of work, you could apply for this unemployment claim, and you could get a pretty decent amount as well, because the government, in addition to your California levels, the federal government in the beginning kicked in $600, and then there's a lot of debate, and they pulled it down to, I believe, $300 a week. That was a week, so that was huge. Something to note too, this might be a tax problem as well, because the unemployment is subject to federal income taxes. So there could be a tax problem there. And a lot of my clients are like, nah, I had withholding on unemployment. I'm like, fantastic. You got 19 grand and you withheld $200. Whoop-de-doo. That's not going to be a huge dent in it. So plan for taxes this year, big time. Should I incorporate? This was a question that was asked. And so I wanted to cover this. I'm going to compare apples to apples here. I can't go into too much detail because everyone's, just like Esther said, everyone is individual. They have individual specific circumstances. And so every plan is very unique and custom tailored. But I wanted to present to you guys something for knowledge. And then if you have follow-up questions and you want a specific answer about your specific case, I can offer those appointments later. But here we're looking at on the left side of our screen as a Schedule C sole proprietor. Many real estate agents start out, well, you always start out as a Schedule C sole proprietor until you take steps to incorporate or form an LLC, anything like that. So let's take a husband and wife, a married couple. The husband doesn't work, the wife is a real estate agent, and the wife may have made $150,000 gross after her expenses, her documented mileage and meals, and the other items that Esther had talked about. She brought her net down to 100 grand. Now let's pretend like she doesn't have anything else to write off. There's no mortgage interest, there's no charitable donations, no kids, no college tuition, nothing like that. What would her taxes look like? What would their taxes as a married filing joint couple look like in this scenario? Well, and I'm going to round up a little bit. They would owe IRS what Nicole terms as regular taxes here. They would owe IRS $10,500 for their income taxes. they would owe the state of California $3,000 for their income taxes. And on top of that, roughly, they would owe a flat tax, a self-employment tax of $15,000. And that is, there's nothing that can be done to reduce that tax in forms of I own a home, mortgage interest, property taxes, donations, kids in college, anything like that, because it is a flat tax on the net amount of your business. So the only way to reduce that $15,000 is more business expenses. Usually we file these tax returns in April, and so there isn't anything much that we can do April 2021 for a small business Schedule C from January 1st to December 31st. We can't make up more business expenses. And so that is really a flat tax on there on the net Schedule C. And so regular taxes, $13,500, self-employment tax, that's your Social Security and Medicare. Now, a lot of people that are working for a W-2 don't even really realize this, but every single time they receive a paycheck, whatever their gross amount is, they paid 7.5% roughly into their Social Security and Medicare, and then their employer paid 7.5% into that pot as well, for a total of 15%. But when you are self-employed, you are the employee and the employer. So that whole entire tax burden is on you. And because you haven't been usually doing it every 2 weeks, or even most people don't even, most of my real estate peeps don't even file quarterlies. And so there's this huge tax burden due April 15th, or for some of you, October 15th. So extra fees, you don't have to file an extra tax return. It's just an extra form on your regular personal tax return. You don't have to hire a payroll company. There's not any extra fees on this. So the total tax due is $28,500 in this simple scenario. Now, if you incorporated, what would the same exact scenario look like? So incorporated, most of my real estate agents are an S corporation, but again, everyone's unique. So I'm not giving legal advice. I'm only giving tax advice, and it's mass marketing. So you should still have an individualized, don't go on LegalZoom and form an S corporation based on this presentation. That's what I'm telling you. And let's pretend like the same wife made $150,000. She wrote off $50,000 of deductions. So her net on her S corporation tax return is $100,000. On an S corp tax return, you never owe the IRS any money if it's on time. And you owe California either $800 or 1.5% of net profits, whichever is greater. So in this scenario, you're going to owe California $1,500. What happens here is the net $100,000 flows through on a form's called a K-1. You don't have to know that, but it flows through on a K-1 into your individual tax return. Again, your 1040, husband and wife married, no other deductions, no kids. And what happens is, again, you owe this is Nicole talk again, your regular income tax, $10,500 to the IRS, same as before, $3,000 California, same as before. But here's the one special thing. You don't owe any self-employment tax on that K-1 of an S corporation. So a lot of people are like, slam dunk, I will save $15,000, I'm going to do it. Well, not quite. So what the IRS has come out and said is that you have to pay yourself reasonable wages on a W-2. And so you work with your accountant to find out what those reasonable wages are. And so a portion of this is not subject to self-employment tax. And so I accounted for those self-employment tax fees. You have to hire a payroll company to file those W-2s for you. To file an S corporation is a lot more expensive than a personal tax return. So that can range from $1,600 to $2,500. And so I've lumped all that kind of in the extra fees so we can still compare apples to apples. So in this scenario, your regular taxes went up by $1,500 because you have this new tax here. You don't have any self-employment tax. You do. It went through payroll, but I popped it down here into these extra fees to kind of show you so I could quickly compare for you. So still in this scenario, your total taxes and extra fees due would be $21,000 compared to $28,500, saving you $7,500 for this one tax move. Now, here's the thing. The more net profit you make, the bigger tax savings are. So that's really important to note. The less income, net income that you make, the less tax savings you are. And from doing this for a very long time and running a lot of calculations, around $40,000 net profit is where it makes sense tax-wise for an individual to start the conversations with their accountant on what the next steps are to incorporate. And so that's what we've determined. About net $40,000, you probably should be incorporated. There's some savings that starts to begin at that level. So we are Profit First certified in our firm, and Profit First is a new crazed book. A lot of you know what Dave Ramsey's Financial Peace University is. We're actually in the middle of a Financial Peace University class right now on Tuesday evenings. It's the first class I ever led on Zoom, and kind of digging it. It's a little bit different. I'm more of an in-person. I get energy from people, and so Zoom's kind of funky, but it also allowed a lot of clients and community members that have children or obligations getting dinner started, things like that, or our San Diego community, because we also have offices in La Jolla. It allowed them the opportunity to actually participate in a Financial Peace University. So there's one cool thing that came out of it. And so Financial Peace University is a 9-week program to teach people how to budget. It gives you tools on how to budget. It helps you save money, pay down debt, and start saving for the future. And so a lot of times in Financial Peace University, we convert over for personal expenses to a cash envelope system. So for expenses such as groceries, meals out, entertainment, clothing, gas, fuel, I can create a cash envelope system in my wallet, and I can use those expenses, and that's how I control my cash. And there's a psychological thing that happens, that's my science term. When you hand over a credit card, nothing happens. I'm not exchanging anything. I hand you my credit card, you hand me the merchandise, and then you hand me my credit card back. So there's been no exchange, and therefore I don't feel it. There's no pain points. They've actually done studies where there's no brain waves of pain that goes off in your body. And then if you switch that to a debit card, there's a tiny bit, because of course then you see your bank account go down a little bit. But when you switch it to cash, pain receptors begin going off because you're having that exchange happen. And they also do studies because everyone's like, what about my airline points that I never use? Or the cash back? It's like, fabulous. You spent $40,000 on your American Express and you got back $2,000. Woohoo. Here's the thing is you end up spending about 18% more by using a credit card. And we all know this because I've gone out to dinner before with my cash envelope system where I actually have $50 to use on my meal. Usually I end up using that all on alcohol. It goes so fast. But after that, then I starve and I don't eat because I'm done. My $50 is gone. When I switch over to a credit card, I'm buying rounds of drinks for everyone. I'm having an appetizer and I'll finish it off with a dessert that I'm going to take with me. So you do end up spending a lot more when you use a credit card. So Profit First, Dave Ramsey teamed up with a guy named Mike McKelowitz. I'm probably screwing up his name, but who cares? You can Google Profit First. He pops up. And he's developed a Profit First, kind of like the cash envelope system that Dave Ramsey used for personal expenses. Now, as a business owner, we never want to use cash because it just gets sloppy. It's hard to track. We forget to give our receipts to our bookkeeper. It never gets claimed. IRS agents go crazy when you show them a cash receipt. So we always like to have documentation through a bank account that we've paid business expenses. So Mike Profit First has designed bank accounts to track expenses. And you set up different bank accounts, a payroll account, maybe a sales tax account, maybe an advertising account. I love continuing education and I'm huge on going to really expensive seminars. So I have an actual seminar account because my business partner, Fred Karma, always reminds me in May that I've spent all my money for seminars and continuing education. I need to reel it in because that account goes to zero. So one of those, if you just take one thing home from my presentation would be for my real estate peeps who I love so much, who don't do their quarterlies and don't have tax money saved. April 15th, you hate coming in here. You tell me it's like going to a dentist. I don't like when you say that. It makes me sad because it's not like going to a dentist if we've properly planned. It's fun. Well, I think it's fun. But please set up a tax savings account and save 15% in that account. And what you'll find is at the end of the year, if we've planned, it's going to probably be better than 15%. You have leftover money to go spend on yourself and do something nice. And pay the tax guy and not enter into one of those nasty installment agreements that you're on a loan with the IRS and God forbid California is going to jump into your bank account and put it to zero. So just be careful with taxes. Don't forget, if you make a $6,000 gross commission off of selling a home, you didn't make $6,000. You have to set aside money for tax. You made the net minus your taxes. And so don't spend the government's money, give it to them. We always want to pay only our fair share of taxes. So we want to get aggressive with tax planning. So thank you, Esther, for all your ideas there. And no one said we need to leave a tip though, right? So save for your taxes, guys. I think that's it. That's me in a nutshell. That's my presentation in a nutshell. So I'm going to stop sharing and I'm going to hand it back to you, Mike.
Thank you, Nicole. I did pull out a couple of nuggets there. One thing I did kind of learn when it became that pivot point of when to incorporate. In my head's $40,000, sort of a net, profit net.
Yeah.
That's where it makes it logical. And yeah, that 9-week program through Dave Ramsey, the Financial Peace University. I've heard a number of people have gone through that program, and it finds that. And you're very correct when it comes to tax savings, especially in the world of real estate, where we get paid in bunches, as I put it, irregularly, being able to set some of that aside.
Yes.
I'm purposely saying that out loud, so hopefully I'll hear myself. And actually someday I'll probably start making a greater effort to do that. I know both you and Esther, please put your information in the chat. Also, we did get one question from Barb, when it comes to, I guess some of us are sort of slow to apply for the PPP program.
Yep, I saw that.
Yeah, can you respond to that? Yeah. Yeah,
so I'll just take some of the chats right now. If you didn't get the PPP, you can still apply for the $10,000 grant. So go do that right now. That's going to be really important. So the website for the grant, let me pull that up again and pop that in the chat because that is really important information. Hopefully a couple people walk away with $10,000 to help them get through COVID. So Riverside County Grant, Phase 3. And remember, guys, this is gone tomorrow. This will be closed tomorrow. And you won't be able to get it.
That grant program, because I know it sort of applies toward businesses, but also independent contractors or self-employed individuals can seize that too.
As long as you have a business license. I know a lot of real estate agents, they fall under their broker business license. So go ahead and grab that from your broker and try and submit that. And at least you're then in, if you don't have all the documentation, try and submit it still so you're in the pipeline because it will close.
I, for one, actually applied for it about a week ago through the city of Temecula. I did not have a business license, but I quickly applied for one with the city of Temecula. I had to upload a couple of things, but it was optional for me to upload the business license.
Good to hear.
That's a little bit of insight from that perspective. Now, I hope most of you, if you have a question, please. We're running a good time here. We were supposed to be here till 11. It's only 10:15. So we got 45 minutes here of questions and answers. So if anyone has a question, feel free to unmute themselves and ask away. And hopefully you won't have any awkward silence here for a few moments.
I can sing if that's helpful.
Esther, is there anything you want to add to what Nicole had said earlier?
No, she did a fabulous job. I do love Profit First. I'm not certified, but I have my books, Nicole. I've been reading. He has another one, Clockwork. So I really love his stuff. And of course, I've followed Dave Ramsey. You know, anything you can do to give yourself that financial independence, I'm all for it, because when you have debt, you become a slave to that debt. Mm-hmm. But financial peace is really the way to go. And all the info, you know, get all the funding that's available to you, grab as much as you can. We're not saying be selfish, but if you need it for your business and you qualify, by all means, keep that business running, because we know that business is the heart of our economy. And that's what keeps our economy running. So keep that business going. And with the year closing though, I've had some business owners who were asking also questions. Is it time for me to close? And evaluate all that. Does running this business really run you down? Does it even make sense for you to keep going? Those are things to evaluate. And Nicole talked about whether do you want to incorporate with the year end coming. You have a certain window for you to incorporate so that that business is all full-fledged by the beginning of the year. So take a look at all that. Resources available to you, make use of them. And great job, my friend Nicole, great job there.
Thank you, Esther.
Sylvia, I learned, I think a couple of people went to, unable to unmute themselves. Did you pick up on that?
And I saw a couple of chats. So the grant that I talked about is Riverside County, so anyone can apply for it. And Mike was saying that you didn't need a business license, especially if you're not in a city, an incorporated area. So go ahead and apply for it and try.
Yeah, I mean, you need to apply for the business license. You don't have to upload it at the time you fill out the application. But I think that's one of the things I want to ask, because I'm in the city of Temecula. If you're in the unincorporated Riverside County, apply for their business license. I mean, you would check the box, yes, you intend to have one by the time, you know, by the time they issue the funds, yeah.
Mike, maybe we should draw a distinction, because there is one for Riverside County and then there was one for Temecula, so that people do know that the funding was available at different places.
Oh, yeah, please expand on that. I mean, we're talking two different grant programs then, huh?
Yes, Nicole was mostly talking about Riverside County. So that's where the funds are still available. I don't think Temecula, I think Temecula is already done.
I think you're right. I'm looking right now. They started with $500,000. Mm-hmm. I'm sure that went pretty damn fast, but as of August, the city has rewarded the maximum grants. Yeah, I don't think it's still available, but I'm still kind of reading it out. Mike, is that the one you applied for then?
I applied for the Riverside County grant program.
Oh, okay.
Yeah, the one that expires tomorrow. Yeah. Yeah, I found that through, that's part of the benefits of being active in the Temecula Chamber of Commerce. Yeah. They send out that weekly, you know, highlight, and it was in that. So I said, yeah, one thing led to another. Yeah. Now, you see what Deborah just wrote? Can you use your business real estate license number in lieu of a business license?
I don't think so, but like Mike said, that you could check the box that you're applying for it, and then I'd apply for the grant first and then go over to the county clerk's website and apply for your business license. Because that worked for Mike, right?
Well, yeah, I did it online through the city of Temecula, and they told me I would get mine within, you know, 5 to 7 business days. So I'm expecting my business license, which I'll post proudly.
And that's a business deduction, Mike. 30 something dollars, not much, but it's still.
Well, I had to pay the extra 20 because I run my brokerage out of my home. So for a home-based business.
I think Marietta's is a lot higher, their business license.
Oh yeah, Deborah is asking. Yes, Deborah, there is a cost for a business license.
To clarify, I did see what I didn't apply. I mean, I applied for my business license through the city of Temecula. The $10,000 grant program is actually offered by Riverside County.
Yeah, and Temecula's is closed. It closed like June 9th, so that's not open. I don't know if they're going to open another one back up, but like Mike said, if you're plugged into the chambers, Marietta and Temecula are doing a fabulous job of getting all these resources out to the community and trying to keep businesses open because like Esther said, backbone of the economy is our small businesses and most people work for a small business, so.
Is there anything else you'd like to add? Either one of you. We have time here. I mean, if you want to tell a little bit more about your, Financial Peace University, is there a Zoom link for that? Sounds like you're in the middle of the program right now. How often do you actually run that?
I usually try and run at least 3 of them a year. And I'm not the only one that runs them. There are, if you go to Dave Ramsey's Financial Peace University, you can plug into your zip code into the search bar and it'll show you all the classes all around you. Most of them are going to be on Zoom. So you could do it from the comfort of your home now and still have great deep discussions with other people on Zoom about the topics that we speak of each week. And which is really cool because real estate agents, why you should be in Financial Peace University is 1, better money management and better steward of your money. It helps you open up your heart and give more as well. But there's a whole entire lesson designed on real estate and buying a home. And so that would be you would be a really good voice for that class on how to help people purchase a home. So that's why you guys should be in Financial Peace University. Anyway, you can go online, you plug in your zip code and it shows you all the classes around you that are starting. So you don't have to wait for my next class. You can jump in any of them. They're all amazing. Most of them are taught at a local church. But the beauty of Zoom is I think we're being able to touch a lot more people now. And if you don't believe in God, you don't have to. That's not what financial peace is. We just look to the Bible because we can all agree, whether you believe in God or not, that the Bible is a good moral compass on how to live your life. And there's good, sound commandments in there or rules in there. And there's a ton of rules about money. And so we look to the Bible just on what God says, or grandma used to tell us on, how to use our money. And so it's not a super religious class whatsoever. There's a few Bible verses sprinkled in there, but it's nothing overwhelming. And that's why they let me lead it. And it's really good. Everyone should be in that class.
Yes, I think so too. Now, before, I also want to talk about, this was a program we put together through our education committee. And I know we do a lot of brainstorming. I also know part of the things that it took us years in the making, and it came down through our SIG program. I know we have some upcoming classes coming up, and I don't know if I want to put, either Cynthia or Barbara or even Jan on the spot. When it comes to that, we do have some time, and involvement, I'm looking for some feedback to see if anyone who would like to learn or have something they want to contribute or something they want to hear more about, that we because a good percentage of us are in our education committee. I'd love to get some feedback from the participants at large, what they'd like to hear from us at the education committee. Is there anything that anyone has to bring that, would like to hear more of? And Sylvia, are we able to, are the people able to unmute themselves at this point? I see a nod.
Hey, Mike, it's Debbie Thomas. Can you hear me?
I can hear you and see you. Thank you for your video.
I just want to say that I was one of the first people to graduate with SIG, and it was very helpful. There was a lot of information. It's not like when you take all your classes for your license where it's like, am I ever going to use this? It really was very useful information. So if you don't have that designation, I would advise you to take the classes and get it.
I mean, it's taught by local instructors, I think we have basically, there's 8 classes. I was part of that, second graduating class. I know it's like 30 or 40 of us are going to be graduating here next month. We try to do that on an annual basis. I don't know if Cynthia or Jan want to sort of elaborate at this point what the next upcoming classes are. I don't see themselves unmuting themselves. So I think maybe if you want to learn more about that, you can go to our website, srcar.org, and find out what the next classes are. And with that, last chance, does anyone have something they want to share or have a want or a need at this point?
I have a question. I kind of got disconnected when you were talking about that you applied for the city of Temecula for a loan. Can we do that also for Marietta? Do you know?
Well, what we're speaking of is actually through the Riverside County $10,000 grant program.
Okay.
In that application, you must have they're asking you to have a business license. Now, if you reside, my business is based here in Temecula, so that's why I kind of had to get a city business license. Now, if you live in Marietta or in Riverside County, you would have to state that you'll either have or will get a business license within your respected city or county, provided you're in Riverside County. Does that make sense?
Yes, thank you.
Now, our next SIG class is actually December 10th at 1 p.m. And that's actually going to be led by our chair this year of our education committee, Barbara Horan. Who I know she's probably very much wants to say something right now, but she's unable to. Sylvia, you want to help her out, or are we going to keep this just a Mike, Esther, Nicole show?
People can unmute themselves. She's not.
You unmute her for
I
her?
unmuted her, but I don't know if she's there. But yeah, I just put some information on the chat. If you want to register for the SIG class for ethics, it's on December 10th at 1 p.m. via Zoom. This is our last SIG class for the year, and we are going to be working on the schedule for 2021. We do have a lot of graduates for this year, so we're super excited that people are taking the courses and are learning valuable information. We have agents that are new. We have agents that have been in the business for a long time, and they're all getting valuable information that they can apply in their business right away. So it's really, really great classes. And Barbara said, I unmuted, but speaker's not working. Super excited to teach ethics in December.
Also, hopefully she'll be ready to chair our MLS marketing meeting, which is going to be, we've moved that from Tuesdays to Thursdays at 12 noon. And she's our chairperson this month, so hopefully she'll get things. That might be a cleaner leak there at 12 o'clock. But that's also been very well received.
If not, we'll be there for backup.
Okay. Yeah, she'll use her extra laptop there for noon. All right. With that, again, I'm going to ask for any closing comments from either Nicole or Esther. If not, we might go ahead and bring this to an end here at 10:30. So, one thing I want to add. Esther, you said you had a couple of books. I know, Sylvia, when it comes to giveaways, you have the register, I think, in a witness of other staff members. Will you randomly pick some names and reach out to them and see how they can receive one of Esther's books?
Yeah, you want me to, do you want to ask a question and have people type first, or do you want me to put their names in the name wheel?
You can do a wheel. I've always seen people use the wheel. It's entirely up to you. I'll give away at least 5 of them. And
if you have the wheel, can you put all the participants in the wheel here in moments? Do you have that capability?
Yeah.
Yeah, maybe.
Yeah, Zoom does that. It's such a fun tool.
If it doesn't make life easier, I'm not that, yeah, not the, I see someone waving.
Who's waving? Oh, I think Edson Moreno really wants to win.
I'm just raising my hand to win that book.
All right, well, hey, we might want to hang out for a minute here and see if we, yeah, the wheel's fun. I've seen that. We've done that a couple times at some of our events.
I'm just, my brain seems to shut down when I'm on the spot, and so I can't find the place for the...
You want to go ahead now?
So Wendy's going to go ahead and do it for me. Wendy's working on it right now.
All right. Now, hey, now either one of you guys want to talk about anything that's happening here locally, or do you know if anything's happening? I guess it's sort of tax related or community related at this point, yeah.
Well, November 17th, the Temecula Chamber is putting out the Economic Focus. It's a free event. All are welcome to come and listen to what the economy looks like and project it to be.
Is that the one with the city managers?
Yes, five of them will be there, and a gentleman from UC Riverside will be there as well.
Yeah, that's the 17th. Yeah, that's at 9. Yeah, the economic forecast for Riverside County. You actually have that down. That's at 9:30, November 17th. And I saw that. That usually cost a few bucks to attend that live. And I saw that it was, you know, a free event. Just had to register to Zoom in. Yeah, I would highly recommend everyone do that as soon as possible.
If I can say something, today is a big day for the Boys and Girls Club. So today we're having our Kids Rock auction, and it's going to be at 5:30, and it's going to be live. It's going to be a great event. Instead of having our gala, which we normally have 600 people at Pechanga, we're having it online, and I can send the link. I'll type the link in, but it's going to be wonderful. They're going to have a whole bunch of different things that they're auctioning off, and the bids are already starting now. So they're doing a sneak peek. They're having a great a black lab that I'm interested in. So we'll see about that, but it's going to be wonderful, and it's to support our 3 clubs that we have in Lake Elsinore, Murrieta, and Temecula, desperately needed to repair and renovate. And as you know, a lot of family members want to take their kids to the clubs, and unfortunately, you know, we've had to close a couple of them. And so this will be tremendously helpful for this fundraiser that we're having. So just wanted to throw that out. It's today at 5:30 p.m. Thank you.
Myrna, thanks.
All right.
That is, I saw like some leads to that. So there's a chocolate lab. So,
Black lab.
Yeah, I'm looking to get, yeah, we might have to talk. We'll see how bad you actually want it. Yeah.
I know.
Oh, look at this. That's awesome.
We're ready.
Okay.
All right, so I'm going to click.
So book number 1. Oh, who talked about Esther? Janet, are you here?
If not, we can do it again.
Oh, I'm trying to think. I know some of us have actually already moved on. What we can do?
I don't see her in there, so you want me to do it again?
Yeah, please. Do it a few times. And we'll get a list of names, and then we can kind of go from there. Yeah. Esther, what I'm thinking, she said she had 5 books. Pull it 5 times,
okay.
And to those people, you don't necessarily have to be here to win. That we're not keep having to repeat it. All right, well, cool. Yes, we'll send her the first one. All right.
Yay for Debbie. Okay.
You here?
Is Colleen here?
Let's do
No?
it again.
Okay.
Getting captivating now, huh? All right. Well, did you get those names?
No. I'll rewatch the video to get the name.
Okay. Well, I kind of wrote down the first
I have
name.
Debbie, David, we had Jeanette. Yeah, I couldn't pull a list of just the people that signed on, so I pulled everyone. I do think we had, I'm gonna stop sharing my screen so I can see you. I think Edson Moreno was the only one that raised his hand. I think we should give him one too.
Well, yes, I think so too. And the ones that ask questions, I think, yeah.
Thank you so much. I really wanted one.
Yeah, I think it'd be good if we gave them to people that are here.
Richard, I think Richard asked a question early on, so I'll send another one for him.
Okay, so we have Deborah, Thomas, Edson Moreno, and Richard.
Thank you.
Well, anyway, we'll get them out to their respected recipients. With that, any other general announcements? I love the one that how Myrna brought up the Boys and Girls Club. Yes, I know. I know we, as a Old Town Rotarian, we ended up spending some time there at the Peugeot facility. Played landscapers for the day, which was fun. And I know Nugent ended up doing something right behind there at Rotary Park. Yeah, they planted a bunch of trees.
Nice.
Anyway, I encourage that. I know the holiday season's coming up. I know we have, it's going to be different this year. And I know how with the pandemic and how it's changing how we do things, how we interact. I know some of us have adapted better than others. I know, it is what it is. So it just needs to pivot and move forward. With that, Sylvia, is there anything else we need to clean up?
Nothing to clean up, but just a reminder, you can join us at noon for our networking and property preview meeting. I'll go ahead and add the, am I still muted?
No.
No, you're good. You're flowing there, flowing great.
Oh, okay. I keep getting a pop-up that says that I'm muted. So I'll put the link on there so you can join us at noon. We also have a brown bag with John Giardinelli on November 19th. This is free for all of our members, so we do encourage you that you sign up. We do record it, but the good thing about being live is that you can ask questions. And we do encourage you to send us questions ahead of time. You can send them to info@srcar.org. And that allows John to prepare so that he has an answer prepared for you for the meeting. And then for all of our property managers, we have John specifically covering property management this Tuesday, November 17th at 9 a.m. And this, again, is free for all of our members. He's going to be answering all of your questions in regards to property management. We know that there's been a lot of changes and updates coming through, a lot of concerns. And so he wanted to just have a smaller group. Normally when John speaks, we have about 300 to 100 people. And so we're not putting this out there for all of the membership, just for our property managers to come in and ask those questions. And so you can send questions ahead of time to info@srcar.org. And all this information and all of our links can be found on our website.
Well said, Sylvia. I do have, yeah, I've already registered for John's brown bag there on actually 1 week from today, November 19th. Those brown bags are always informative and kind of entertaining. We do get John's commentary, you know, sprinkled in there. You know, usually will last a full 2 hours when John speaks. He's not afraid to speak. And I think he's adjusted. Yeah, he's like many of us. He doesn't favor Zoom, but he does. It has, you know, the sort of silver lining to being able to Zoom is you can reach a lot more people. You know, we had at a peak here, we had quite a few people today, and I know it has been able to reach people who weren't necessarily able to, you know, physically come to our location. All right, well, I've rambled enough myself, and I know others probably want to go ahead with their day, prep for our MLS marketing meeting. So with that, I'm going to go ahead and bring this meeting to close with my virtual mallet. So here it is, ending of our first tax panel, which I like having 2 people. I think that worked out well, and I want to continue this. And hopefully you guys will reach out to either Nicole or Esther with further questions, and hopefully they'll come back to us here in the near future. So with that, I adjourn. Good day.
Thanks, Mike, for having us.
Bye, everyone.